Understanding SOFR, Secured Overnight Financing Rate. What is SOFR? SOFR, Secured Overnight Financing Rate, is a benchmark used for U.S. dollar loans, derivatives, and financial contracts. It was introduced as a replacement for LIBOR, which became unreliable after the 2008 financial crisis. SOFR is backed by U.S. Treasury securities, making it safer and more transparent. How does SOFR work? SOFR is based on actual transactions in the repo market, where institutions borrow cash overnight using Treasury bonds as collateral. It's published daily at 8 a.m. ET and calculated from over $1 trillion in transactions, making it highly accurate and reliable. SOFR averages and index. Since SOFR is an overnight rate, SOFR averages 30, 90, and 180 days, and the SOFR index are used for longer-term loans. These tools help smooth and compound the rate over time. Why SOFR matters. The shift from LIBOR to SOFR has increased transparency and trust in financial markets. SOFR is now widely used in business loans, mortgages, derivatives, and bonds. Advantages of SOFR. Based on real transactions, not estimates. Stable due to large daily volume. Secured by safe U.S. Treasury securities. Endorsed globally by the ARRC, Alternative Reference Rates Committee. Challenges. It's an overnight rate, so longer-term calculations are required. Existing contracts had to be updated during the transition. It can sometimes be volatile. SOFR Futures. These are contracts traded on the CME that allow speculation or hedging on future SOFR rates. They are cash-settled and used by banks and investors to manage interest rate risk. Comparison with other rates. SOFR is based on actual trades, while LIBOR is based on estimates. The federal funds rate applies to unsecured loans, whereas SOFR reflects secured transactions in the repo market. SOFR's structure makes it ideal for U.S. dollar financial contracts. SOFR and crypto markets. While SOFR doesn't directly impact crypto, its movements can reflect broader financial market sentiment, which may indirectly influence the crypto space. Closing thoughts. SOFR has established itself as a transparent and reliable benchmark in global finance. As a safer alternative to LIBOR, it is expected to remain a key reference rate moving forward.